Hello, everybody. It's David Scott Peters with the restaurantexpert.com. I'm thrilled you're on today's YouTube live event where we're going to be talking about erasing your fears of budgeting forever. This is a really powerful webinar. It'll literally give you the opportunity to change your lives, literally make more money. Have managers have a system in place, a process, a plan to help you make money. Now we're going to get started here in just a second, but before we do, I want to give everybody a chance to log into the YouTube live event. We've got record numbers on here. We've got almost a couple hundred people on this webinar, so I want to give everybody an opportunity to log on. As we know, most restaurant people, we're tardy. I appreciate you, those of you who are online right now that are on time, very much. So again, we're going to get started in just a second for the live YouTube event, Erase Your Fear of Budgets Forever. With that said, before I get started, I want to put a couple reminders out there. Number one, if you're new to me and the restaurantexpert.com and what we do, I want to make sure you click on the subscribe now link on my YouTube channel. That way you get updated on our weekly video tips and YouTube live events like this on a routine basis. We try and do them monthly, but sometimes I'm on the road in pretty high demand speaking all over the country that I can't always get them in place. So make sure you subscribe now. Now, throughout this live YouTube event, I want to make sure that you have the ability to place comments in the comment box that you're going to see on your screen. The only way you can do that is you've got to log into your YouTube account. So if you've got a Gmail account or something else, make sure you log into your YouTube account right now if you want to have any chance of typing in any notes, because I'm going to have two people on the webinar with me, and that is Greg Sauerback, our solutions coach, and Jenny Brooks, who handles all of our communication. They're going to be answering questions for you or gathering your questions for me to answer in a little bit. Quite honestly, there's way too much for me to manage at the same time to be looking at the chat window and be able to answer questions for you when I see them. So in this case, what's happened is I'm not going to pay attention to them, but we are, as a team, going to pay attention to them. If it's something easy, Greg or Jenny will actually answer it for you, or they're going to gather your questions and they're going to then give them to me on my phone later on a different chat app so that I can see them and answer your questions at the end of the webinar. So let's run through the housekeeping again. We're going to get started in just literally 1 minute. Erase your fear of budgets forever. I'm going to get started on that in just 1 minute. If you'd like to participate in the YouTube live event and have your comments answered, make sure that you log into your YouTube account. That way the chat function is available. And then finally, make sure any questions you have, either Jenny Brooks or Greg Sauerback are going to either answer them for you while I'm speaking, or they're going to gather them, and at the end of the webinar, I'm going to answer them for you. Now, as you are logging in and want to test out your chat works, do me a favor and let me know in the chat window your name of your restaurant, and where you're from. What city and what state. I'd love to see where our reach is coming. We literally have members all over the world, primarily US and Canada, but I'd love to know where you are. So in the chat box right now, let us know, and Jenny and Greg will welcome you here. I do it personally by chat, but I'm going to pay attention to you right here. So we're going to get started here right now. Let me switch my screen. And I want to welcome everybody again to today's webinar, our YouTube live event. And this is Erase Your Fear of Budgets Forever. This is the key to your profitability. Now, I'm going to tell you before I get started that the two most important things any restaurant should have to have any chance of success are budgets and recipe costing cards. Now, we're not going to talk about recipe costing cards today, but we are talking about budgets. And I do want to say out there that you think about it, what are the two things most independent restaurants never have? Budgets and recipe costing cards. Why? They're so hard. No, they're not freaking hard, and boo-hoo. You're in the toughest business I know. So suck it up, Buttercup. We need these tools. Today is about putting your budgets in place, and I'm going to show you how freaking easy it is. Right? There are no excuses. You had a budget once. If you're a restaurant owner and you're on this webinar right now, you had a budget once. Do you remember when it was? Do me a favor, in the YouTube chat, type in when you had a budget. I want to see how many of you are being honest about it. Very few of you, unless you're a member of mine, have a budget right now. You had a budget for the first time and only time when you opened your restaurant, right? Before you opened, you went to the bank and said, I need money. And you said, oh, isn't this blue sky look great? And when's the last time you ever went back to that, right? Your budget collected dust, and then a year later you looked at it and you missed it completely. And you're like, oh well. Wrong. I'm going to teach you how easy it is to create a budget and why it's a living, breathing entity. How you literally review it every single month and change it going forward because things happen. Our plans never go as planned. As an entrepreneur, I can relate. My plan has never gone to plan. Now, I've gotten close a couple times, but there's always something that pops up, and we need to be able to react. We need to be able to adjust our plan, and your budget is your plan. So now, let's look at a little bit about me. For those of you who are not familiar with me, let me tell you a little bit about myself. I grew up in my family's restaurant and catering business back in Linwood, New Jersey, where I worked for the toughest manager I know. Anybody here ever worked for your mom? Yeah, I know what you're thinking. It sucks. I hated every minute of it. Now, she did me a favor. Let's think about this. Why did I hate it? I was a teenager. She rode my sister and I twice as hard as everybody else, said there'd be no favoritism. And as a kid, you hate that. Well, she did me a favor because every job I had after that, I rose like that because I had a work ethic like nobody else around me. So she did me a favor. Now, just in case some of you may have talked to her, payback's a bitch. She works for me now, but I love her to death, and she did a wonderful thing for me. It was just tough as a teenager. Now, the skill set she taught me, I later took advantage of, and I worked for an independent brew pub and cafe in the early 90s called Coyote Springs. This is when brew pubs were opening one a month, or at one point, literally one a week, I should say. We're seeing the resurgence of brew pubs right now. I just hope that as an industry, we understand that great food is extremely important in the brew pub industry because that's where we missed the boat as a whole back in the early 90s. Well, we were opening brew pubs all over the place. Well, for us at Coyote Springs here in Phoenix, our first location was a cash cow. It was hand over fist money. It was unbelievable. Started as a bartender, then I moved up in the ranks and manager, eventually became the operations manager. We decided to open a second location. Well, if you've ever opened a second location in the wrong place, it's kind of like owning a boat. How many of you on this call own a boat? You know what I'm talking about then, right? It's a hole in water in which you throw money. And as all the things were going wrong at that point in time, I had to fix things. And that's where I developed what I call my restaurant operational smart systems. Restaurant systems that are simple, measurable, applicable, repeatable, trainable. And the key with any system is it has to be simple or no one will use it. It has to be trainable, or how the hell do you get somebody to use it? Well, as the years went on, it was time for me to move on. I went to a company called Famous Sam's, a 30-unit restaurant sports bar chain here in Arizona, as a franchisor. I was the director of operations. We were opening 8 stores. We were going gangbusters. Guys who bought the company wanted to take it public. It was unbelievable. Well, as we were growing, it was going crazy. The guys who bought the company damn near bankrupted in under a year. Well, as management started taking off, I'm like, I'm not staying with a sinking ship. I moved on and went to Scottsdale Culinary Institute, and I taught management, human resources, wines, and spirits. So my chefy types on this call do know that don't talk to me about food quality. Don't talk about cooking techniques. That is not my thing. I cannot cook. I have 0 cooking skills. Don't get me wrong, I can work expo in a sports bar or casual concept environment. I can't do fire hold. I can work fry station, garmager. I can work sandwiches, but I can't saute. I can't grill. And hell, you don't want to see me prep. I take that onion and a chef knife and I take that full nice layer and I throw it away. I'm a lazy SOB. But with that said, let me be very, very clear. With the right systems in place, I can run any of your kitchens. Because I have systems in place. I can order on budget, order on pars. I can schedule on budget, schedule on my staffing guides. How many kicks do I need in the AM and the PM? I can prep. Heck, I can do everything I need to manage the kitchen. What I can't do is cook. And do know that you need to have these same systems in place, that it's your system, your process, your way, because not everybody has skill sets of being a chef. Like myself, but I'll be a very successful restaurant owner. Why? Because there's a system, process, way. I can run a kitchen, open and close stations with side work and so on. Well, as I was teaching at Scottsdale Culinary Institute, I was consulting, and the minority shareholders at Famous Sam's became the majority shareholders and said, David, would you come back? I kept saying no, 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 and then it was, well, a month before my first child was born. And they asked me to come back, and I said, okay. I walked into a disaster. A complete, utter disaster. This company should have been bankrupt, done. Yet I was given the instructions to create a plan and sell the company in 5 years. You know what? I missed that goal by only 3 months. I know what it is to be an independent operator. I know what makes the chain successful. And it's my job in life to give you the same systems and tools that chains use without losing your independence. We love our guests, we love our employees, but we are going to do what they do, and that's make money. And that's the unique skill set that I bring to the table. I'm not a chain restaurant trained guy. I came up from the ranks just like you. I've made every mistake that cost you money. And it's my job to help you as if you were working with a franchisor to say, hey, why make the same mistakes that cost money? Hey man, I know where the landmines are. I've blown my leg off, which cost money. Don't step on them. Here's the roadmap to success. And one of those things we're going to talk about when we talk about success is a budget. That's what today's about. Now, I've been helping independent restaurants for over 14 years now. And my goal has never changed. Give you the same systems and tools that chains you without losing your independence, but let's make money. Now, what are we going to learn on today's webinar? We're going to learn the importance of budgeting, how to budget the right way, how budgets make you more profitable, how to easily recover from any roadblocks that happen because we're going to edit and change. But more importantly, how a budget takes you from being a reactive management team to a proactive management team. And that's the critical piece to a budget. Now, if you work with me on any level, and many of you have seen me speak before, seen my YouTube live events, been to my workshops, seminars all over the world, you've probably seen this slide because it's that damn important. To work with me and my team, therestaurantexpert.com, on any level, even if it's for the next hour, you have to change your mindset that you have a responsibility to run a profitable restaurant. It's not I hope, I pray, my social working friends. You have a responsibility. First of all, you have a responsibility to your customers, your guests. They walk in your door because you fulfill a need in the community, don't you? They want what you have. They need you. Well, we have a responsibility to our employees. That's how they're gainfully employed, pay their bills, feed their families. Now, granted, half of them drink their paychecks away, whole nother story. But you have a responsibility to them. But here's where we screw it up as independent operators. We have a responsibility to you, your family, and any investors you may have. And I'm here to say you come first, not last, my social working friends. First. Now, why do I call us social workers? Well, what industry are we in? Do me a favor. If you're on the YouTube chat, type in what industry you're in. You know what? Some of you are going to type the restaurant industry. Some of you are going to type in the food business. Some of you are going to get it dead on. We're in the hospitality business. Look, if you want to be in the food business, you're competing with a gas station. We create memories, experiences. The hospitality industry is what we're in. With that said, we're built to take care of people. We want to give our guests great portions and high quality at a value. We want to make sure our employees have jobs even when it's slow. We want to make sure that they can pay their bills, and we pay overtime, that they don't work second jobs because we don't want them working those, and so on. Next thing you know, your company, you're not making money. And here's the deal. If you're not making money, at some point in time you close your restaurant, there is no restaurant for your customers. There is no restaurant to supply or create jobs for your employees. There is no business for you. So here, when we put ourselves first, not last. And we say it's important. We have a responsibility to run a profitable restaurant. We're ensuring there's a restaurant for your guests. We're ensuring jobs for our employees. We're ensuring our family and our investors are taken care of. And here's the deal. When you make money, that means you can do more with your money. Not be a victim. Like, oh, shit, what do I have left over? Oh, I've got nothing, as overtime's bleeding you dry and you're having theft and all these things that you're not paying attention to. Well, all of a sudden, we're making money. I can decide to do more for charities I care about. I may decide I'm actually going to pay Jose overtime. I've decided to give him my money because he's that valuable to me. But you see the difference? Instead of being a victim or lucky, we plan for a success. It's our money. Very, very important. So moving forward, you have to keep that in your brain. So now, I said the two most important things any restaurant should have are budgets and recipe costing cards. The two things most independents never have are budgets and recipe costing cards. Again, why? Because they're so hard. Boo frickin' who? Like, I have no patience for it. It's okay to be ignorant to the fact. But now that you've seen me say this, and you're on this live YouTube event, or you're one of my members or see me speak all over the country, look, Being stupid is one thing. Being ignorant is another. You could be ignorant to the fact of how important they are. You don't get a chance to be stupid, to be dumb, and not have a budget when I've told you and shown you why they're so important. So understand, I'm setting you up, right? You don't want to be dumb. You don't want to be ignorant. You want to have power of profitability at your fingertips. Your budget is critical to that. So let's talk about it. Let's say this yellow piece of paper is my P&L. When do you get your profit and loss statement, your income statement, operating statement, same damn thing? Get it at the end of the month? No. You get it 15 days in the next period, 30 days, 60, 90. I've seen worse. 15 days, if you get a P&L quickly, 15 days is pretty quick for most. That means when I look at my P&L, I immediately go to the last page and I go, oh shit, and I throw it on my desk, right? That's never the number you actually want. Even if you've done pretty good, don't we want more? Did anybody on this call, did anybody on this webinar start their restaurant to be a charity on purpose? Raise your hand or type in yes. Now, we may laugh at that. Truth of the matter is, I've had people who say yes, they're called churches. They have a very different mission, and even them, I try and get them to at minimum break even or make some money that they can do more versus being an amenity that sucks up some of the money that they raise that could do great work. So either way, you didn't start your business to be a charity or an enterprise, a business to be profitable. Well, when I get that P&L and I look at it and I'm unhappy, I throw it down. What does a P&L represent? Can anybody tell me? Type it in your chat window. What does a profit and loss, income statement, operating statement, same damn thing, what does it represent? Can anybody tell me? The past. Right? It doesn't say any, it just says, look at the past. And I don't know, can anybody on this live YouTube event right now, can you change the past? The answer is no. No freaking way we can't. So what good is it? Well, it has a lot of power. I've got to know where I am. But let's be very clear what it is. My business partner, Chef Fred Langley, puts it this way. Imagine your profit and loss statement is a rear view mirror. You're driving your car and your P&L is the past, the rear view mirror. Where have I come from? If you drive your car going forward for any length of time other than 10 seconds traveling at no miles per hour, what are you going to do? You're going to crash, right? If you're just paying attention to what's behind you and you're going forward, you're going to crash. What a budget allows us to do, what systems allow us to do, is give you a front windshield that I know where I'm going. It's important to know where I came from, but what's more important? Where I'm going. What is my path to success? That's your budget. There are no excuses that I'm too busy, it's too hard. I'm going to show you how easy a budget can be. Now, you get your P&L. If I run my business off the past, it's too late. If I lose $5,000 last month, $3,000, $1,000, I don't give a rat's ass. You made $2,000, but you were supposed to make $10,000, you've lost money. Can you change that? No. Most of us throw it on our desk, oh crap. Well, here's what we're going to do. Budgets are very, very important. Let me give you an overview of the process, and then I'm going to walk you step by step through this YouTube live event, how to create the budget easily. But if you were working with us, one of the things that we do with our members is we say, hey, give us your last 12 months P&Ls, month by month by month, and a summary for the year. Ultimately, what am I looking for? I'm looking for your sales, what your trends are to see what your seasonality is. I want to look at the end of the year and look at your expenses for the full year. Is it a fixed or variable expense? We'll go through that in great detail in just a moment. But if I look at it and I say, hey man, 80% of your sales are food, 10% are liquor, 5% bottled beer, and so on. Well, I know the mix of what your sales were. Then I look at your cost of goods sold, and I look at the year as a percentage and say, oh, I ran a 34% food cost for the last 12 months. 34, 34, 34, 34. Well, look at your pour cost by category, look at your labor costs. If it's salaried managers, take the total divided by 12 as my monthly. If it's a variable expense like servers or cooks and things like that, percentage. And next thing you know, I go line by line through all of my P&L, fixed or variable, and I build a template, copy it forward, and I say, okay, what are my sales going to do? And are they going to go up or down? And that will ultimately say, if I operate my business the same way I did the last 12 months, The next 12 months, here's what I'm going to make or lose. And I want you to look at that number and I want you to go, ew, I don't like that number. I deserve more. My family deserves more. My restaurant deserves more. And I want to be profitable, so I'm here for my guests, my employees. Well, now we create a plan. What systems are we going to put in place to create a new reality? As I'm going to show you later, I may say we're going to put it in the key item report, waste sheet, and purchase allotment system, budgeting systems, 2 clipboard systems, really easy things to put in place. Train them for the first month. And in the second month, we plan on reducing food costs by 2-3 points by just budgeting. We're going to be working on recipe costing cards through the way. And on month 3, we're going to do a menu profit generator analysis. What's my ideal food cost? And re-engineer the menu where I can help you drop your food costs the first time 3 to 7 points. And we know on our budget we're going to go 4 points. So all of a sudden we started at 34, we dropped 3, that's 31. We're going to drop 4 more, now it's 27, but that's in month 5 when I put the new menu on the table. You create your plan for success. This is huge. Then when I've got my budget and I've got my P&L, I put them side by side. I see each month where I hit, where I missed. If I missed my numbers, what systems did I put in place that my managers aren't using? Now I've got to reassert imposing my will. This is what I want done. Retrain it, reteach it, coach it, hold them accountable if I have to. Let's get on the right path. What if they were doing their job and they used the system that I put in place? Well, what new systems do I need to put in place to change my reality? For instance, if I look at this and I put my budget and my P&L side by side and I lost $1,000, $1,000 is gone. Well, most people, if they lost $1,000, look at the P&L, throw it and go, oh shit. Not you. Because after today, you're going to know the importance of your budget, comparing your actual to your budget, and see you lost $1,000. Guess what we're going to do? We're going to change the next 11 months. Tiny little changes. Little changes without giving up guest satisfaction, without cutting product quality, without cutting service, never cutting or going against your core values, who you are as a person, how you want your restaurant run. We're going to make really tiny changes to what? Make up the $1,000 I lost. See, I had a plan to make a certain amount of money at the end of the 12-month period. I'm going to make that money. And if I miss it here, I'm going to change my plan and make up for that $1,000. That's what's really important. See, a P&L is a reactive tool. It's your rear view mirror. Your budget is a proactive tool. Where am I going? What is my path? What is your path for success? This is critical. Changing ourselves from being a reactive team to a proactive team. That's what budgets do. Now, I want you to notice on the bottom of the slide, it says, warning, industry standards don't apply. This is critical. I do not want to hear anybody tell me that the National Restaurant Association says the average food cost is 34%. Who gives a flying hoo-ha that it's 34%? What is an average? It's a whole group of restaurants, and what's average about them? Well, is your restaurant average? Does everyone on this webinar have the same restaurant on the same street corner with the same price point, same product quality, same style of service, same? The answer is no. So what is average about your place? Those aren't your numbers. See, it's important we create a budget for you. What is your plan for success? The hell with industry standards. Here's where industry standards can really kill you. Let's say the national average is a 34% food cost. And you go home and you see a speaker like me at some show and come up with 34% because that's the national average. You say, chef, I want a 34% food cost. Right? 34%. Chef says, okay. Well, what if your menu, you were a steakhouse, and your target food cost was actually going to be 36 or even higher, 38%, based on what your customers actually purchase, recipe costing cards, and your menu mix. And you say 34%, chef, 34%. How the hell does chef make 34%? He or she's got to cut product quality, portion get smaller. They got to cheat the guest, raise prices to a point where the value is no longer there, and all of a sudden you're going out of business. Oh, wait a second. What if you're a casual concept? Let's say you're a Mexican food restaurant, and your ideal food cost or your target food cost is 22%, but you're telling your manager 34, and they hit 34, and you're like, hey man, great job on your 34% food cost, when they're losing thousands of frickin' dollars every single month. But you're excited, you're happy because they hit a false number that was pulled out of your ass. That is no way to run your business. What should your food cost be? Your pork cost, your labor cost by position. And for some of you, you've dug such a big hole with your vendors, with your landlord and so on. You've got to get more aggressive. This will give you your path to success, your restaurant, your success. Screw industry averages. There's nothing average about your business. I hope that makes sense. Critical. Now, there's one number before I go into the budgeting process that I've got to be very, very clear on. And if there's only one number, one thing that you can remember from this webinar, I'm going to tell you right now, it's this number. It's called prime cost. And it's a critical piece of your budget. Now, to old timers like me, and I'm telling you, I'm an old timer. I just turned 50 last year, and I can remember doing my nightly numbers in the office using green bar paper, a pen, and whiteout with an adding machine. Right? You've got software, you've got spreadsheets, you've got all these tools that we didn't have back then. Literally, it was a green bar paper, this huge ledger. You used pen, and then you white it out if you made a mistake. Right? Well, prime cost, to me as an old timer, used to be called controllable costs or controllable expenses in the control of management. How I hire, fire, utilize people, purchase product, utilize that product. It's a manager's report card. How did you, because as a manager, you can't control what I pay for rent. You can't control what marketing, and whether as an owner I decide to do the crack cocaine of restaurant marketing and do a Groupon at a 78% discount, right? Kill me now. You can only control the people that come to work and how they purchase and utilize the product that you serve. That's your report card. So today we call that prime cost. Prime cost is total cost of goods sold plus total labor cost. Now, what is cost of goods sold? To calculate your cost of goods sold, let me be very clear, you cannot use your purchases divided by your sales each month. That is not your food cost. That is not your pork cost. That is not your overall cost of goods sold. It's an absolutely wrong number. There is no way in hell of knowing your food cost, because why? Certain months you could buy more product than you use and it looks like your food cost is higher. Other months you buy less, but you use what's on the shelf and it looks lower. See, when we look at cost of goods sold, it's beginning inventory plus purchases minus ending gives me use. Use divided by sales is food cost. What leaves the shelves, whether stolen, wasted, spoiled, hopefully sold. If you want to learn about that, make sure you look on my YouTube channel where I've done webinars and tips on cost of goods sold. You want to make sure you watch it. Now, with that said, some of you on this call, I can guarantee you, have not done inventories because cost of goods sold is beginning and an ending inventory to have it work. And don't get me wrong. No, you did inventory. You do it once a year. Your CPA calls up and says, hey man, what's your ending inventory for the year? And you go, I don't know. What was it last year? You go, they tell you, and you go, oh, add $500. That ain't taking freaking inventory, okay? You literally got to count stuff for value. Now, for those of you who don't do that, and I'm going to go on a ledge here, and I'm going to say that 90%, 9 out of 10 restaurants on this call right now don't take inventories. Don't do it. Oh, they're too hard. Boo frickin' who, right? They have to be done. And most of you don't take inventories because you don't do shelf-to-sheet inventory, right? We have a system that can help you do inventory. I've got $5 million restaurants that do inventory in under an hour every Sunday. But yours take 5 hours because, quite frankly, this is what happens. Here's a clipboard. Here's my spreadsheet all printed out. Chef walks in the walk-in cooler and goes, first item on the list is milk. Right? He walks in the walk-in cooler and goes, milk. Milk, 2. I wonder why it takes 4 hours, right? I will teach you shelf-to-sheet inventory in the order it appears on the shelf the way you want it counted. This way we can have inventories done in under an hour accurately. Well, again, I'm going to assume that you don't take those inventories unless you're one of my members and you've already been working with us for a while. So with that said, how do you calculate your cost of goods sold? I got to backtrack. I'm going to tell you it's purchases divided by sales, but not by month, but for 12 months, a year. So I'm going to take my last 12 months purchases divided by my last 12 months in sales, and that is my cost of goods sold. So don't worry about it. If you don't take inventories, that's how you're going to get it done. Why? Because the fluctuation in inventory going up or down in a 12-month period over that volume is so small, it's not going to move the needle. Then we've got labor cost. That includes raw labor cost, what I call raw labor cost, my definition. If I pay a cook $10 an hour and they punch in and punch out in 1 hour, does $10 come out of your bank account, owners? Think about it. Does $10 come out of your bank account when you do payroll? No. $12, $13, $14 comes out of your bank account because why? There's taxes, benefits, insurance. Oh, they're a part of prime cost too. Then I've got salaried managers, right? That's all a part of it. And what about you? What about the owners that are on this? Do me a favor right now, if you're on the YouTube live chat, if you've logged into your YouTube channel and you can chat, answer me this question. Restaurant owners, do you belong in prime cost? Are you a part of the calculations? Type it in now. The short answer is maybe. What do I mean by that? Let's say you are a restaurant owner and you've got keys in hand and you run shifts 5 days a week or more. You are a manager on the floor. Like when people show up, they're reporting to you. You're assigning stations. You are assigning prep. You're placing orders. You're taking care of the guests, seating them, running food. You're a manager on the floor. Then you are a part of prime cost or an adjusted salary. If you were to pay yourself $65,000 a year to be a manager in your business, and you would only pay a manager because you're a smaller restaurant, $45,000 a year, then $45,000 of your salary belongs in prime cost. The rest is just operating expense. It's owner compensation. Why? Because I need to replace you. I need to fire you. I want to make it so that we have you working on your business on it, right? I want you managing people, not, well, let me go backwards. I want you managing systems, developing people, marketing, working on budgets, growing your business, leading your team. I don't want you flipping a burger, saving $10 an hour. Because quite honestly, to save that $10 an hour, you're losing thousands because you're not paying attention to your business. Your job as an owner is to lead. Let me be very, very clear. So at some point in time, I want to replace you. So the portion of your salary has to be a part of prime cost because I'm going to give it to somebody else. If you work 2 days a week on the floor as a manager, then 2/5 or an adjusted 2/5 of your salary is a part of prime cost. So prime cost is total cost of goods sold plus total labor costs, including taxes, benefits, insurance, for all those people it takes to run the business. The day-to-day restaurant, I should say. If you got a marketing person or a bookkeeper on hand and things like that, they're not a part of prime cost. They're corporate overhead. Okay, now we all understand what goes into prime cost. What do I measure it against? Well, I tell you this. Is it against gross or net sales? Now, I've given the answer on the screen, but I'm going to make sure we understand why. It's gross, not net sales. So let me define what they are. Because quite honestly, your point of sale system, 8 out of 10 POS systems right now, don't define gross sales properly. When it says gross sales in the column, it's net sales. Gross sales is the ring at the register before discounts, not including sales tax. The ring at the register before discounts, not including sales tax. What is that? What do I mean by that? Well, first of all, sales tax is not a sale. It's the pleasure the government gives us of holding their money and penalizing us like we're the frickin' mob, or they're the mob if we don't give it to them. Look, we've all done it. Don't play with the government's money. It's so fricking expensive. So if I look at it and I ring up a $10 burger and I comp $5, the gross sale, remember, not including sales tax, the gross sale is a $10 burger. Net sales are the ring of the register after discounts, not including sales tax. Ring up a $10 burger, comp $5. Net sales is $5. Which do I measure? Well, I told you, it's gross sales, not net sales, and many of us have been raised in this industry to make it as net sales. Why is it gross, not net? Well, think about it this way. I asked the chef to put out a burger for $10. Use $3 in product. Use divided by sales says 30% food cost. You decide to run a BOGO, buy one, get one free campaign on burgers. Next burger comes in, $10 burger, you comp $5. Did I use half the product? No, I still used $3 in product. Use divided by sales takes a 30% food cost, now makes it what? 60%. Is that chef's fault that you ran a discount? Don't get me wrong. I'm going to track my discounts, and if we've got discounts because our food sucks and our service sucks and things like that, we've got a problem with our management team. But let's say that's not the problem. It's a promotion. Well, I asked chef to collect $10. It's not his or her fault that I collected $5. I asked chef to use $3 in product. Use divided by sales. This is how I measured their success. Still not with me? Think about this, my social working friends. You're gonna have a charity event in your restaurant tomorrow. Your social worker, your heart's just so big, so excited. You're on the board and you're gonna close your restaurant and have a $14,000 day. It's just your charity. Great event. You're so excited about it. And your heart is so big, you decide you're going to cut it in half, meaning the bill. Instead of a $14,000 day, you're going to comp 50%. So let me ask you a question. Do you buy food for a $14,000 day or a $7,000 day? Which is it? $14,000 day. Do you staff the business for a $14,000 day or a $7,000 day? A $14,000 day. Do I measure prime cost off of gross or net sales? The answer is gross sales before discounts. Really, really important. Now we're going to come back and we talk about the budgeting process in a second. We're going to come back to prime cost because we need to understand this. This is critical to us making money because it's the one thing we can control. Now, why is it so important? Well, where should that number be? When I first started my business 14 years ago, over 14 years ago, that target was 65% for a full service restaurant, 60% for a quick serve. Now I thought I was patting myself on the back. I had my members, full service restaurants down to 60%. Aren't we doing good? Well, we weren't. Why? Man, we've got people chewing up all of our dollars as we speak. We're an industry of pennies or dollars. Answer this question. Are we an industry of pennies or dollars? Truth of the matter is it's pennies. So every penny matters. So think about it. Who's taking our money? Well, we went from doing almost 100% cash sales when I first started in this business 30 plus years ago. And now we're 90% credit cards. So now I've got this 2.5% or even higher discount rate depending on whether I'm getting screwed on my credit card discounts. I've got, rent is going up. I've got liquor costs are going up. Then, what happened? 9/11. Worst day in modern American history, my lifetime. 9/11. Why the hell would I bring that up in a webinar, a speech, ever? Because what happened on the 12th readjusted our industry forever. What happened? Owners, you've been in business since 9/11. On the 12th, what happened? Our food costs went through the roof. There was a major adjustment. Consumers couldn't buy a gallon of milk for $1 anymore. No, it was $3, literally overnight. And what have your food prices done every single delivery since then? They've gone down? Hell no, they've gone up. And we've got people chewing into our margins all the time. So I'm here to tell you, these numbers don't work anymore. They don't. If you do $850,000 a year or more in sales, your new prime cost target is 55%. 55%. Now I want you to think about this. Let's say right now you're on this webinar and you're thinking, number one, piece full of shit. 55% is not even possible. Get the hell off my webinar because you're right. If you think it's not possible, you're right, it's not possible. You've said so. So why even try? It's impossible. It's called a self-fulfilling prophecy. Truth of the matter is it's more than possible, and I'll tell you why in a second. But for those of you hanging on every word and going, all right, 55, I'm excited about that number. I'm a little concerned. I've been running at 65%, patting myself on the back, and you're telling me there's 10 points more on the table. Think about it this way. If you're $1 million a year business, that's it, $1 million a year gross sales, and you're running 65%, right now I'm telling you there's 10 points on the table. 65% prime cost down to 55, 10 points on the table, or $100,000 in bottom line profitability on the same sales you're doing right now. That's got to be exciting as all hell. There's no get rich scheme. There's no marketing ploy. We operate better. If we do our jobs, give great hospitality, great food quality, great service, do all the things that we are put on this earth to do, but not waste our money by putting systems in place and some really hard work in the beginning by getting these systems in place and holding people accountable. Not going to be that easy. But if there's hard work involved, and I could hand you a duffel bag with $100,000, but I said you had hard work to do. Okay, think about it. Right now, those of you who are in the chat function, I want you to type in yes or no to this question. How many of you would do the work? If I said I give you a duffel bag with $100,000 in it, but you have to do work and it's going to be hard work, how many of you raise your hands by typing in you do the work? Yes. Type in no if you wouldn't be willing to do the work. If I could give you 100 grand, you'd do the work. Go ahead. Those of you who typed in yes, bullshit. Now, what do I mean by this? I get people excited about doing this work all the time. I've been doing this forever. And what happens is you go back to your restaurant and you say, I'm so excited. I saw this David Scott Peters guy. We do recipe costing cards and we're going to do this, this, this. And your employees go, no, no, no. We've tried that. Our restaurant's different. Don't tell me your restaurant's freaking different. What do you serve with a limp? I mean, you know what I'm saying? It's the hospitality business. We have food, we have liquor, we have people, we take care of our guests. It's hospitality. They ain't nothing new. There's nothing different. But we have different margins, different numbers, because we have different styles of service and price points and all these other things, but there's nothing different. And you get these 1, 2, or 3 employees that tell you, no, it can't be done. And then you call me up and you say, David, I tried. I love your stuff, but I tried. What the hell does that mean, I tried? I tried to get my managers to do it. Number one, who signs their frickin' paychecks? Right? Now, don't get me wrong. I'm sounding really hard. Who signs their paychecks? Look, man, I'm a social worker. I'm going to teach them. I'm going to train them. I'm going to coddle them. I need them, want them to help me be successful. I'll give them a lot of extra rope. But at some point in time, I'm not going to allow them to sabotage my success. They get to make a choice. Changes are coming, but she doesn't have to be a bitch. She's coming. And it starts with systems like budgets. And we're going to raise that bar. And some people aren't going to like that raising the bar. But I'm going to give them every chance to be successful, every chance to help me be successful and the team be successful. But they get to make a choice. No longer will they hold me back. So you're going to have to make that decision. Are you willing to lead your business to success? And I'm telling you right now, I don't care whether you own a restaurant. To be successful in the restaurant business, you must be a leader, and we're not all born leaders. These systems, like budgets, help us communicate what we want done, how we want it done, how well we want it done, by when. These are critical. So now, we look at it and say, 55%, man, $100,000, I'm in. Well, here's the crazy part. Those of you who do $2 million in sales, $3 million, $4 million, $5 million, $10 million, that number drops like a rock. We've got a member who does $5 million a year as a Tex-Mex restaurant in Dallas, Texas, runs a 42% prime cost on a weekly basis, mints money. And then we've got businesses, Times Square, New York, and in San Diego, that are more bars and restaurants that do $6 million a year in sales, that run as low as a 39 or even 32.8% prime cost without cutting guest satisfaction, without cutting without cutting service levels or product quality. Why? How could they run in the 30s? Well, number one, at $10 million or $6 million in sales, I should say, in the height of the season, they could do a $200,000 weekend. So number one, you can't add any more servers, cooks, cashiers, whatever it is. And because they sell more booze, they get a better prime cost. Now think about it. In the old days, when I first started, we'd have high food costs, low pour cost, and that's how we wanted to sell more booze because we ran our pour costs at a lower number. Well, today we're forced to go to scratch kitchens. We have to drive the cost of goods sold down because why? We have $15 minimum wage happening on the East and West Coast. Right? How do I overcome $15 minimum wage with labor costs alone? I can't. I need cost of goods sold. So now we bring both our food costs, pour costs are about the same. So how is it that these businesses can run prime costs in the 30s, low to high 30s? I'll tell you why. It takes one bartender sweating in ice, head down in the service well to do $1,000 in sales in 1 hour. It takes 3 line cooks to do $1,000 in food sales in an hour. So it's efficiencies. So no matter where you are, how do we determine where you are? Where you should be, I should say. It's your budget. Why are you on this call? Where should you be? Not at industry standard. Where should you be? Based on your core values, your business, whether you've dug a hole, whether you're a social worker, whatever it may be, you get to make the choice. So understand, lots is possible, but we got to start somewhere. So we start with the 55%. For those of you on the call saying, hey man, I'm under $850,000 a year in sales, where should I be? 60% is your number, 60% prime cost. Now, how we get there, I don't care. look at this. When we talk about prime cost, I could have a family dining restaurant run a 30% food cost, 25% labor cost, that's 55. I could run a burger restaurant, 20% food cost, 25% labor, 35% labor cost, that's 55. I could be a steakhouse running a 40% food cost. How the hell can a steakhouse run 40% and make more money? Well, look, 15% labor cost. Think of it this way. It's something called cash contribution. While the cost of goods sold is high, the revenue I bring in is high, which lowers my labor cost. It takes the same cook to flip a burger that makes me $4 that it does a steak at a 40% food cost that makes me $13, $20, right? So our efficiencies again. Sales are higher, even though the cost of goods sold are higher. Since the sales are way up, our labor cost drops. That's why prime cost is the one number you must know to have any chance to make money. It's critical to your success. So we know 55 is the number. Now let's go into creating the budget. Now, when I started my business, I used to get people into a 3-year budget, and it was like my business partner was like, dude, let's get them to do one year. And the truth of the matter is that's all I care about. I don't even care about a fiscal year. Do you know what I care about? The next 12 months. Because I can't change. The fact is, if you're on this webinar right now, we understand we're in the month of June. Well, this is going to live on the internet forever. So somebody may be on this another time in another month, and they're going to go, why is he talking about doing July through June as a budget? Don't want a fiscal year? Yeah, I want a fiscal year. But right now, I've already got 6 months that are gone. I can't do anything about changing that. This is about being a proactive management tool of the future. So I'm going to write myself a next 12-month budget. The next 12 months. If I want to, when I get to December, I'm going to rewrite my budget starting January through December, if that makes me feel good. But otherwise, I don't give a rat's ass. What do I want to do? I need the next 12 months. So let's talk about a short-term budget. Here are the 4 steps we're going to go through. We're going to go through sales forecasting, setting your cost of goods sold targets, your labor targets, prime cost targets. That's why we went through that. And we're going to estimate your operating expenses. So first step is looking at our sales forecast. What do we think we're going to do? Now, sales forecasts are critical. If I don't forecast my sales, not only by month, but eventually by day of the week, how do I know how many people to bring and how much food to buy, how much booze to buy? If I bring in too many people, tick, 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 you lose money. Bring in too few people, long ticket times, terrible guest experience. I've pissed off guests, I lose money. I bring in too much food, it gets stolen, wasted, spoiled. I can't pay my bills because all my cash is tied up on the shelves. I lose money. If I buy too little food, 86 items, piss off guests, lose money. You understand, you've got to have your best guess on sales. It's critical. Well, how do I create that monthly number to start for our budget? Well, I look at my last 12 months, 6 months if I'm a brand new restaurant. Again, brand new. I've only got a little bit of expectations. We'll talk about what we can do for you. But either way, I maybe have a smaller sample. But I've got to make a guess. What do I look? I look at my sales by category, my customer counts, my average ticket. I look at my sales journal. What were my daily sales, customer counts? What was the weather? Were there events like the fair was in town? I had events such as catering and things like that. So look at that information. Next, I want you to think about what are your plans for the next year? Am I raising prices? Am I putting out a brand new menu? Am I adding a bar? Am I adding seats on the patio? Am I removing seats because I've got construction? I need a bigger walk-in. Do you know when you have that construction out in front of your restaurant, you actually can know years in advance. There's a planning commission in your area. You need to go down and see if they're planning anything. Right? What's going to impact my business, positive or negative wise, when it comes to my sales coming up for the next year? Am I booking more parties? Well, once I put all this stuff together, my numbers part, I'm going to swag. What is a swag? Can anybody tell me? Type it in your question, your chat window right now. What is a SWAG, a swag? I'll tell you. It's a scientific wild ass guess. Right? The science is I've got 12 months worth of information. That's the science. The swag is I'm pulling it out of my rear end, man. It's a guess. It is my best guess. It's an educated guess. Now, I'm going to show you how we can swag this very easy. I've got a system called Sales Forecast Wizard. It's a spreadsheet. Let me show you how the instructions on using it, and then I'm going to demo it for you right now. First of all, what I'm going to do is in step 1, I'm going to, in the spreadsheet, put in last month or last year's sales, whatever the month I'm grabbing. So for instance, if I'm very seasonal, in June, my sales spike. December, they're really low because I'm a summer resort. Well, then I want to use last year's June or last year's July sales, if you will, if I'm forecasting for next month, July, to forecast this July. But if I'm a reasonably level restaurant and seasonality isn't that great, I mean, I may have some spikes, $20,000, $30,000 a month, but it's not $100,000 or $200,000 a month. I want to use last month. I want to use last month's complete sales to forecast the next month. Why? Because this is going to show me my sales mix. Then all of a sudden I decided to add karaoke, but add karaoke to my Thursdays, and my Thursday sales have risen. It's important for me to know that that happened because eventually this sales forecast is going to be used for my day-to-day sales. Right now, for our budgeting purposes, we care about a single month. But let me show you how that works. Next, on step 2, I'm going to plug in the month I'm forecasting for. The month I was going to use, the month I'm going to forecast for. Then I'm going to plug in what my anticipated sales are going to be. If I think my sales are trending up 10%, trending down 2%, whatever it may be, I put in that number and the system will automatically create my average Monday through Sunday. Let me show you how this works. So I'm going to go into Sales Forecast Wizard. I've already got one pre-populated for me. Now, what I'm going to do is I'm going to just go to the full screen here. Now, here we go. What I'm going to do is I'm going to type in my sales. Oops, hold on one second. I'm going to type in my sales date for last month or the year I want, the year before, in this case, last month. It will automatically populate all of your days of the week. Next, I'm going to type in the yellow boxes all the sales I did. I can get these numbers from my end of day report, my DSR report in the POS system, my QuickBooks. What were my gross sales by day? And I come all the way to the bottom and I did $279,000 in sales for that month, last year, or in this case, 2013. Well, I then come over to step 2, and in that yellow box, I type in the month I'm forecasting for. In this case, you can see I've done this demo a million times. This is 2013, 2014. Now it pre-populates the calendar. It knows if there's 31 days, 28 days, pre-populates. My last step is here in this column O. It's to type in my forecasted sales. What is that going to do for me? Well, it's going to show me I did $279,000. I forecasted $295,000. There's an increase. And what it does is it gives you your average Monday through Sunday. Now I can copy this and use this later on for other systems in my business, but this gives me a great idea of what my sales are going to be. Now, for those of you who are spreadsheet geeks, let me show you what this does. Let me go back here. And I've got something here I want to show you. Unhide. Oh, there we go. Here are all the formulas that have been buried into this to give you your average day. Come over here to the other side and we adjust. This spreadsheet will literally tell you whether or not, if you've got 5 Fridays in a calendar month, it's going to calculate as a weighted average. Now, this is real important. I've got one for 12 months, and I've got one for 13 periods for those who are on period accounting, 13-period accounting. Now, let me be very clear. It's a tool. It's pretty damn cool. With that said, do you want this? Now, I told you, those of you who are on the webinar on time, I've got Jenny Brooks and Greg Sauerback as my team, answering your questions in the chat, collecting your questions for me at the end. They're going to give me the questions here on my phone for the tail end of the webinar. Do you want a copy of either the 13-period or 12-month, the monthly sales forecast wizard? I'm going to give it to you. What you've got to do, and I don't care if you watch this as a recorded webinar. Right now, you guys are live, right? We saw the calendar on my screen, whole bit, right? We are in June. But the fact of the matter is what? If you want this, I need you to call Greg Sauerback. You're not going to opt in anywhere. You're not going to email. You're going to give him a call at 1-877-457-6278 at extension 106. Now, he's on this call right now. So I've got his phone on Do Not Disturb. If you go right to voicemail, he'll return your call. But if you want a copy of it, you've got to make sure you give him a call. I'm happy to do so. I don't want to bait and switch you. Go, oh, that was pretty cool, but you can't have it. Now we got our sales forecast. Now we've got to look at all our expenses and decide, is it a fixed expense or a variable expense? What's the difference? A fixed expense when it comes to labor is salaried managers. Whether I do $1 in sales or $100,000 in a month, I owe them their salaries. Where my hourly managers or my hourly employees are variable expense. If my sales are higher, I get more money to spend in labor. If my sales are lower, I cut back. Same thing for other line expenses might be my loan. If I own my building, meaning the bank owns it, and I have a loan payment and it's the same every single month, that's a fixed expense. But if I'm on a percentage lease with my landlord and it's 7% of sales, my sales go up, I pay more. If my sales go down, I pay less. Really, really important. Advertising might be a variable expense where if I sell more, I've got more money available to market. Again, look at your P&L, decide is that fixed or variable expense. Next, we look at prime costs. I'm not going to spend a lot of time on this. We've already been through this. I need my cost of goods sold based on use. Beginning inventory plus purchase, mining ending gives me use divided by sales. Food cost, port cost, liquor, bottled beer, draft beer, wine, by percentage. If you don't have that, we're going to look at your last 12 months purchases divided by your last month gross sales. We need to gather our labor costs, but I need you to break it up. Salaried people, what are their annual salaries? We divide that by 12 to come up with the monthly. If we've got our hourly people, I need to make sure it's by department. Don't give me front of house, back of house. How the hell do I control that? Let's say in back of house and I'm using way too much prep, but I have no idea. See, I need people punching in as prep cooks, punching out, running as cooks. I need to know where dishwashers and so on. Maybe I've got really lazy people and I've got 3 dishwashers and they're doing nothing. Whereas I could easily run with 2. I don't know what it is, but I can't tell you that that's your problem if it's just back of house labor, front of house labor. So break it out. Dishwashers, prep cooks, cooks. I want to make sure it's delivery drivers, it's window people, it's cashiers or full service, bussers, servers, food runners, hosts, bartenders. You get the picture. Break it up. Then I need my payroll, taxes, benefits, insurance, my workers' comp, and so on. For the most part, workers' comp, fixed expense, whereas my payroll taxes are a percentage of sales. What is that? So you're just gathering this information. Then again, we go down our P&L, our profit and loss statement, and we look and say, what are each one of these expenses? Are they fixed or variable? If they're a fixed expense, we take the total for the year, divide it by 12. If it is a variable expense, we take the total for the year, divided into gross sales for the year, and we come up with a percentage. Use divided by sales gives me 34% food cost. It gives you 3% labor cost for servers and so on. Advertising expense, fixed, variable. And we go down and we mark those numbers down on our P&L. Once you have that information, it is really easy to create a budget. I'm going to show you how fast and how accurate you can create a budget by just gathering this little bit of information. Now, here's something really important to know. If you want your profit and loss statement to mean something to you, you've got to set it up properly. What do I mean? I will tell you, 8 out of 10 P&Ls we look at for independent restaurants, they suck. I'm telling you right now, I don't want to offend you, and your accountant's not wrong. As long as it follows GAAP, generally accepted accounting principles, it's GAAP, it's good. They all pay taxes, but you can't run your frickin' restaurant on them. Some of you are working a cash versus accrual accounting. What is the difference? Cash is paid for, collected. This works for construction. But the fact of the matter is, whether you collect the money, if you had an event, it's a sale today. Whether you paid Cisco, US Food, Benny Keith, Shamrock, whoever, Maine's, if you paid them or not when food got delivered, it's an expense. You're on accrual accounting, earn OUs. Make sure your books are set up this way, because many of you who have your books on cash accounting, you're paying your CPA a lot more money to redo the books at the end of the year in accrual accounting to pay your taxes, because by law, because we have inventories, it's got to be on an accrual basis. Plus, if you're on cash basis, I may have all this food come in and sales through the roof, but I didn't pay for any of the food, and I run like a 10% cost of goods sold. Next month, my sales drop, I don't buy any food, but I pay the bills from that busy month, and I've got a 50% cost of goods sold. It's what leaves the shelves. That's why inventories are critical. So Make sure you work with your CPA, your bookkeeper, to make sure your books are in accrual accounting. Next, make sure you've got a chart of accounts that means something. There is no wrong chart of accounts. I've talked to my CPA about this. We've talked about restaurants. I've known them for 20 plus years. There is no wrong chart of accounts. They all pay taxes. But to run your business, there is a wrong chart of accounts. So here's an example of what I would do. Number one, here's our chart of accounts that I would give you as a member as a suggestion. Let me be very clear. You don't need to scrap your whole chart of accounts. You may edit or adjust your current chart of accounts because you may have 6, 12, 20 years of history. You want to be able to compare apples to apples. You want to make small adjustments. Either way, look, I break up food, liquor, bottled beer, draft beer, wine, merchandise. Hell, I'm so old in my chart of accounts, I've got cigarettes, right? I'm an old timer. So income gets broken up. Then we have a matching cost of goods sold. We don't have food and liquor. We've got food, liquor, bottled beer, draft beer, wine. Because why? Each one will have their own target cost of goods sold. Then we go to labor costs from salaries, administration, all the way to position. And you can decide, you want to take your taxes, benefits, insurances, just employee benefits, or you want to line item it because you've got your payroll reports that'll tell you what FICA and federal taxes and SUI and so on are. But I need to gather it this way. Then I want to set up my profit and loss statement in a way that means something to me. So let me back up for a second. Notice I've got cost of goods sold, I'd have gross profit margin, and then I've got my salaries and wages, which would give me an operating profit line before I get to the rest of my expenses. Why? Many of you litter your P&L alphabetically. You got to find your cooks and your servers, and you add up your payroll and do all this stuff to come up with labor cost. Well, prime cost is my number one thing that I've got to control. I want it all at the top of the P&L. Sales, cost of goods sold, labor, prime cost, bang. Critical. You can set it up any way you want. Even if you're in QuickBooks and it's alphabetical, notice I've added 4-digit codes. And I leave a gap of 10 between each so that I can make insertions if I want to get even more detailed and put them between different numbers. Now it's not alphabetical, it's numeric order, any way I want it. So now, once I get past the operating profit, I've got my operating expenses. Notice at the top I have occupancy cost. It's the number one expense I have next to anything else, right? Cost of goods sold, labor, controllable, but those things that I've got to pay for at the high dollar is my occupancy. Well, look, it's at the top. Rent, real estate taxes, property taxes, insurance, and other municipal taxes. What does it cost me to be in this building? Then I got my utilities, I got my repairs and maintenance. Then I go further down the P&L, my G&A from office supplies and overshorts and training. I go down to my travel and entertainment, legal and accounting. Go further down. Now I'm direct operating, my linens, my restaurant supplies, decorations, printing, marketing expenses. Then I get to my bands and entertainment and depreciation, amortization, income tax, non-cash items. What did I do? I set up my P&L in an importance. So when I look at the beginning, I know my sales, that's what I want to know. I know my prime cost, I want to know that. Then what was my occupancy cost, repairs and maintenance, all these things, my utilities, in the order of importance to me that by the time I get to the last page, it doesn't affect me much. So make sure your chart of accounts is set up in a way that means something to you. And then make sure every line item, every general ledger that has been listed, you know what goes into it. I don't care if you've got a GL that says XYZ category. As long as you know the 5 vendors that go in there and it's for roofing supplies, I don't care what it is. I'm making something up that's really stupid. Why? Because I don't care. But you better know. I do not want to sit with you and go, what's in that expense? And you go, I don't know. I got to ask my accountant. Are you shitting me? This is your business. These are your numbers. You need to frickin' know them. And how do you know them if you don't have good P&L, if we don't have budgets, if we don't review these things? Because again, a P&L is not just to tell me what I made or lost and we throw it on the table and hope we made money. It's critical because it goes back to our budget and it's measure. It's a measurement. You know the phrase, that which we measure improves? It's so important. Now, what we want to do if we've gathered all that information is we want to create a budget. So if you've got any questions, again, I want you to type them in the question box. If anything I've covered, you've got questions, I will answer them at the end of the webinar. Either Greg Sauerback or Jenny Brooks will gather it for you. They'll put it on my phone in a different chat window so that I go back to it and I can answer them for you. What I want to do right now is show you how we do budgets for you and how you can do a budget. In fact, I'm about to demonstrate to you a piece of software called our Budget Creator Pro software. This is online, allows you to go to the cloud-based to create your budgets, do budget variances, measure it, and up until today has only been available to our paid members. If you stick with me by the end of all the way through to the end of this webinar, I'm going to tell you how you can have this, an installation of this for your business for free. And I don't even care if you're watching this a year from now and it still lives on YouTube, I'm going to offer this to you as well. So stick with me. Now we're going to exit this out. I'm going to go into our software here. So I'm going to go into something called Smart Systems Pro. It's our online restaurant management solution, handles every aspect of your business, from daily manager log to cash controls, online scheduling and labor controls, complete food and beverage and merchandising systems, recipe cards, ordering, inventory, prep, key item reports, waste sheets, culminating in a weekly budget variance. But we're working on macro now. We're working on monthly. So I'm going to log in. It's a cloud-based system. And for those of you who are members, I'm going to make sure if you're not using this system, I'm going to poke you in the eye and understand we're going to put a budget together for you and do a budget call. Notice here on the left-hand side as I scroll, my cursor is at the bottom of the left-hand navigation. It says Budget Creator Pro. Once logging into SSP, Smart Systems Pro, I'm going to click on that. Look, it brings me to Budget Creator Pro. I'm going to log in as an owner of my restaurant, my demo restaurant, and here come the budgets that I've put together. Now, I've created two that I want to use for our demo purposes. Now, in order for you to be able to see these numbers better, I'm actually going to just go to my main monitor, so you're not going to see me on camera anymore, but know that I'm here. You can hear me, right? All right. I'm going to go here, this one in the middle called Budget Template. And as I highlight over it, it says Budget Template, Create Your Plan. Here's what I'm going to do. I've already pre-created this for me. I'm going to view edit. There's some data I've already pre-populated in it. Here's what I want to do. I'm going to take this to full screen. I'm going to expand all. And you'll notice at the top, what I'm going to do is I'm going to type in, I'm just going to arrow key over. I've pre-done many of the months for us already. I'm going to pre-type in what my sales were last year for the same months. Now I come into, I've got 3 months I've not typed in. I'm going to type them in for you just to show you how freaking hard it is. Sarcasm. I'm going to just type them all in. 414.25. I'm going to type in one more month. 515.26. Now when I click on this, click out of it, what did it do? I've got what my sales were by month. As I come up here to the top, you'll notice on the upper left-hand side, I've clicked in annual sales. I'm going to make it match this number. So I'm going to type in 1420203.51, hit enter. Now, what happens is each one of these months, notice there is a percentage of sales. I'm going to now switch this as a percentage of sales method. It is no longer entered by the number. It's entered or changed by percentage only. What did I do? I just created what our sales mix is, our seasonality, if you will. I know in this restaurant in September, 10% of sales for whatever, we have an event in town, whatever it may be, but in January, we do 7.8%, May 7%, right? April, 10%. Well, this creates my seasonality. This gives me the ability to look up here at my sales and say, what if I increased my sales by 10%? Well, I now change this to 1562,223.86, hit enter. Now watch this $115,000 sales in July. It's now 127. Instead of 115, it's 127. The software automatically knows the seasonality, that 8.16% of whatever that number is July. So now we can play scenarios. What if my sales were higher? What if they trained lower? All I do is change that one number and my whole budget for the whole next 12 months is automatically changed. Now I'm going to put in my sales mix by category. Where am I going to get this from? I'm going to get it from my POS system. I'm going to get it from my end of day report. I'm going to get it from my QuickBooks or Peachtree file, whatever accounting software you're using. And all I do is, what is my sales mix? And the key here is, does it equal 100? There's no red number, there's no green number, it's 0. So I know that 81 cents out of every dollar that comes in is food sales. Then we grab those food cost percentages, those poor cost percentages that I got from my P&L. Remember, I took the total divided by sales, and I'm just going to type them in. So a little planning work goes a long way, because this says 26% of all food sales, $103,000, is $26,932. I go through, I go further, and I look at my salaries and wages. Again, did the same thing. Well, I'm going to come down here to my manager salaries, 234.67. Then I go to my percentages. Notice I can switch these at any point in time, just a simple double click. So this is a percentage or variable expense. Notice, I am literally flying. Why? I have the work already pre-done for me on this P&L where I typed in the numbers. Then I come down to my benefits. Now this section down here is the only time a percentage doesn't drive off of sales, like in July, $127,000. This percentage is off of payroll. So when I come in here, I find out what my costs are, and in this case, 12% of payroll is my taxes, benefits, insurance. On top of that, I've got a workers' comp payment, in this case, of $800, and I pay for one person's insurance because I'm under the mandated health care restrictions at $850 a month. Real simple, just put that all in. Now I've pre-populated, so you don't watch me type the whole damn thing, whether things were a fixed or variable expense. If it's over here in the numbers side, the dollar side, it is a fixed expense. If it comes down here and I go further and it's 1%, that is a variable expense. Is it fixed or variable? And I go through and I put all this information in, ultimately giving me what my profit and loss would be for the month. But I don't really care about that yet. There's one other piece that I need to make sure I do. In here, I right click, prime cost. Any of these that are in red, I make a part of prime cost. So my owner's salary in this case is a leader in the company, not a manager. I've got admin. Only those people running the business are in red. I want them to be a part of prime cost. Now watch this. This is not a spreadsheet. This is online software. I want to populate this the rest of the year. I right click on July at the top. I click on use as budget basis. Watch your screen. This is freaking amazing. I've got a full year budget template already created from scratch. Unbelievable. Now I'm going to make changes, but what can I do? I can come all the way down here to the bottom. I want to scroll to the right, and here I want to look at this, and this restaurant would make me about 12% profit margin. What do I want you? I want you at a 15 to 20% profit margin. Most restaurants, if you're under $850,000 a year, we're going to back that down. But I'm shooting for 15 to 20%, which is amazing because why? Most restaurants make nickel to 8 cents on every dollar, 5 to 8% profit margin. In fact, Ohio State University said about a decade ago, did a study and showed that the failure rate in restaurants in the first 3 years of business is 62%. I don't want failure. I want profitability. I want a successful restaurant. And when I look down here, here's this line right here called prime cost. For the year, this is running a 59.76% prime cost. And in most cases, we'd be like, man, that is freaking awesome. Well, not awesome. Where do I want you? This does over $850,000 a year and more in sales. I want you at 55%. Now let's create our plan. So I'm going to save these numbers. I'm going to scroll back up to the top in a second. And here's what we're going to do. Is we're going to say, I want to make a plan for success. What do I do? Well, I come down to my food costs, and let's say you're just starting to work on your plan, and you know your food cost is 26%, but you've never worked with us before at therestaurantexpert.com. We're going to teach you 2 clipboard systems called the Key Item Report and Weigh Sheet, and a budgeting system called the Purchase Allotment System. You want to learn those things? Search my YouTube channel. I've got a live webinar where I go over ordering on budget and how we use those. But I'm going to say, you know what? We're going to implement those systems. I want to make a change in my business. So what I'm going to do is I'm going to right click, click on insert comment. This way I can leave little crumbs on what I'm going to do. We're going to teach the purchase allotment system and implement the key item report and waste sheet. That's what we're going to do. Now we're going to hold them accountable. Notice there's a little triangle there, and when I bring my cursor over that, the comment comes up. That way we can leave ourselves a note. I happen to know that from experience that we're going to enforce the key item report, waste sheet, and purchase allotment system. And we expect a 3% drop in food cost. I've seen this. I've seen as high as 10%. It's like magic. So what I do is I come in here and I change this number, 3%, right? We said we're going to drop food cost by 3%. This now becomes 23%. Oops, let me type it again. 23%. That's my new target. So I go from 26% to 23%. But what about the rest of the year? Well, I can right click on this, use as budget basis. Now watch what happens the rest of the year. Food costs 26, 23, 23 going on. But I also know at the same time I don't come in here, I'm going to edit this comment and I'm going to say we're going to work on recipe costing cards. Complete by end of August. Now let me do a favor here. I've got to help myself out. I'm working in the wrong month, but this is real easy. Cancel. I'm going to delete this comment. I'm going to delete this comment. Why? I just noticed I was in October. Well, watch how simple this is. Right? I'm not going to lose any time. 23%. Oops. 23%. I'm going to make that 23%. I'm going to edit my comment, right click, insert comment, paste, done. The only thing I missed was enforce. So enforce new systems. Okay, just to make it faster. Now we come in here and I know that if I do recipe costing cards and I do menu mix that I want to have, and I'm going to have them done, what I say, I'm going to have these done by the end of August. So that means in September, we're going to do an MPG, menu profit generator call with DSP. If you're wondering who DSP is, that's me, David Scott Peters. We're going to create a new menu. We're going to say engineered for a 19% ideal food cost to hit a 21% actual food cost. Okay? Makes sense? We're going to do this. And so I'm going to have a new menu on the table in October at 21% food cost. Okay? I'm creating a plan. I'm leaving myself notes. Now I come here, I change this to 21%. I right click, use this budget basis. From this point forward on that line, the rest of the year is a 21% food cost. Right? I come down. Now just out of curiosity, what does this do? Let me refresh the profitability. We're going to go from 11% profitability, 12%, to 15% with that one change. That means almost $50,000 in bottom line profitability by getting our food costs in control. This is why I tell you, if you want to control your labor costs with rising labor costs, why it can't be done with just labor controls at all, just all by themselves. Now I'm going to look at my bottled beer cost. NA Bev looks fine, liquor looks fine, and want you 16 to 18%, up to the low 20s if I'm a call well. But look at this, 26%, I don't feel good about that. I think that should be 25%. So I'm going to implement controls in July. I'm going to do a key item report on bottled beer. And this way I want to stop the theft. I'm just a little bit off. I feel like it should be at 25%. I made that change going forward. Draft beer looks astronomical. I think it should be 21 to 23%. If I've got high-end beers, meaning I'm using craft beers, maybe I've got theft. Maybe I've got a problem with my system. And so I'm going to check my draft system. Oops. I'm going to fix it, and I'm going to have that fixed by August, and I'm going to get myself down to a 23% pour cost, right-click, use a budget basis. What am I doing? I'm creating a plan for success. You understand, I could do this in any month, but I'm choosing right here. I told you at the beginning of this, I didn't write a budget for January through December because 6 months are gone. This is a proactive management tool. All I care about is the future. Now, I go through all that. I come down here to my labor, and I take a look at it. Am I raising salaries? Am I adding people? Whatever it may be. Let's say I'm just going to make some small changes in the month of August. I'm not going to put in comments just to speed things up. And let's say I'm going to do 4% for my servers. I think 5 is high. I think I'm looking at dollars per labor hour later, and what we're doing, I'm going to take my hosts down to 1%. I'm going to have my managers work the front door. My cooks down to 9.5%, only 0.5%. But I'm heavy in my kitchen on dish, I go to 1.5. Now, instead of doing each individual line, I just right-click on the payroll expense for that month. I click Use as Budget Basis, click Yes, and the rest of the year is now our new labor targets starting from the month of August. Give it a second to catch up here. Done. Let me save my work. Now, the next piece is I'd go down, and I'm not going to go through every single thing I would do on a budget. But I'd look line by line by line by line, and I'm going to look, could I reduce my rent? Are my taxes right? Utilities, is there a way I could save? Line by line by line. Does my repairs and maintenance look high? Whatever it may be. In this case, I'm going to scroll all the way down, and I'm going to find something that I already pre-planned, and that is looking at my comps and discounts. So complimentary food, I think 3.5% is high. I'm sorry, say 4%, 3.5, whatever. I'm going to take this to 3%. I'm going to right click, use as budget basis, send it all the way across, and I'm basically done. I'm going to save this. Now, if I have a loan payment that is going to go away, I would go to that fixed expense in that month, and I'd delete it, and I'd have it 0 going forward. If I'm adding expense, I'm going to do that. So you create your plan, kind of a quasi-accrual at the top, cash at the bottom basis. Now, what do I find when I did this? Well, I know that now I'm almost a 20% profit margin. That's huge. That's where I want to be. I can see that my prime cost goes from 59%, drops each month is slightly different, ultimately running at a 52.83% prime cost. Now I'm at my efficiencies. I'm appreciating that my efficiencies make me more profitable on this just a small increase, 10% increase in sales. What else can I see? I can see my running total. I'm going to make 15 grand, 25, but ultimately I can come down here and see my running total of what I'm going to have in the bank. This is important if I'm seasonal, and let's say January I go out of season, and I know that I've got $152,000 in the bank that I can deplete some and still make money by the end of the year, but I've got months that are going to suck away dollars, and I'm okay. Look at this. I'm going to show you something really critical when it comes to looking at your numbers and why a budget is critical. I'm going to go to my labor costs. Now notice here, I've got a labor cost in July of 34%, 30 in August. Why? Sales go from 127 to 132 to 156. So in my 156 month, my labor cost is 29%, including taxes, benefits, insurance, as high as 34% when I didn't make changes to my labor yet. Ultimately, when I come down here, this raw labor cost line, I want you to look at this, 29.43, 25.92, 25.17, 26, and so on. These are our labor targets to be used throughout the year. You don't look at the end of the year at 26.296% and run every month at 26%, because in July, it'd be impossible and our managers will fail. And you're yelling at them to hit a 26%, and 29's the number. But then if they hit 26% in the month of September and 25 is the number, they're losing you money. We have to have a budget in order to figure out what our labor costs should be for the whole year, but ultimately by month. As sales go up, why does this work this way? When my sales go higher, or let's go backwards. If my sales are low, it means that my salaried managers chew up more and more of my money. Meaning, at some point in time, I don't even have enough for minimum staffing levels if I'm really seasonal. I only have one cook, one server, one manager on the floor. And you know what? My labor cost is through the roof. Vice versa, in high season, my sales are so high that my managers take a really small percentage of the money. I've got a lot of money left over from variable labor, but at some point in time, I hit maximum staffing levels. I can't add another cook. I can't add another server or cashier. My customers are managing my efficiencies. And so we can plan that. What did I just do? By creating this, I know that for me, I'm going to make $300,000 instead of $100-something thousand. I know what my plan for success is: implementing systems, creating a new menu, fixing my beer system, and so on. Right? Did the same thing for labor. Now I've got a plan for success. What is my next piece? Well, let me save this. I'm going to go to normal screen, go to my dashboard. Here's the big wow, right? Why do I want all this? I'm going to go to my budget variance report. So now let's say, for most people, you'd say, I'm going to do a budget, I'm going to forget about it. Wrong. We're going to go back to our budget month after month after month, and we're going to put in our actuals. So watch this. We created our plan for success. I come down here at the bottom, I click on actual numbers. Now it's going to open up a new window, and it shows my actual numbers. I'm going to type in my actual sales, or for many of you who are members or in the very near future, we are almost finished with our QuickBooks interface, which allows you to export into a spreadsheet and import all of your numbers, map them once, and everything's going to be automatic. But in the meantime, I type in my sales. Why is it critical? I thought I'd do $3,000 in sales. I did 105. I'm 2,000 to the good. I'm excited, but I missed it in some other areas. Doesn't matter. Here's where it's critical. My budget was 26% food cost. 26% times $103,000 would say I'm going to use less food than I actually did. See, what I'm going to do is ignore the forecasted sales now and multiply 26% times actual sales. Because in this case, I should have used 26 cents on every dollar instead of $103,000, $105,000. So it means I should have used more. So 26% times 105 actual sales says I should have used $27,000, but I actually used $28,000 based on inventory. I lost or mismanaged $845 in food product. I do this for each one of my categories. And ultimately, for this month, my managers wasted $1,300 in cost of goods sold. Come down here, look at my labor costs, do the same thing, see where I hit or missed. In this case, in labor, we lost $800. Come down, I look at my line by line, look for my reds, my greens. My utilities were lower because I took an average of utilities, and utilities don't match sales. They match weather. It is now going to be 118 degrees here in Phoenix, Arizona. Don't you wish to be me? Well, guess what? For many of our restaurants in this area, our sales are lowest now. We're out of season, but our power bill will be the highest. But to make life easy, we just averaged our power bill out, and we're going to see some savings this month, if you will. Go all the way down, and we get to the very bottom, and we see that we should have made $12,000, almost $13,000 in profit. We actually made $11,000. We mismanaged $1,400. Now, many of you may think, wow, that's no big deal. My prime cost was supposed to be 59.87% this month, came in at 61. Again, $1,400, no big deal. I say bullshit. Let me be very clear. I say bullshit. $1,400 times 12 months a year. right? All of a sudden, oh, I wonder why I couldn't pay myself. I wonder why I couldn't get that piece of equipment. I wonder why I couldn't give my people raises. You understand, it's only $1,400 times 12 months. So what do I do now? When I'm done with this, I'm $1,400 off. I'm going to tell you right now, I know the numbers are going to look small because I've made myself larger. I come up into my plan and I say, oh, what am I going to do? I'm now going to find a way to get my food cost down to a 19% food cost. Push that throughout the year as an example, and all of a sudden I'm changing the future. See, a budget is a proactive management tool. It helps us plan for success. Now, I'm going to show you in a moment how you can have a copy of this. If you're a member right now, one of my members of the restaurantexpert.com, you've got access to this. If you're not using it right now, shame on me. You haven't figured out there's a link. Call us. We're going to create the budget for you. We're going to get a call, and we're going to go through the plan for success, and then we're going to help you measure on a monthly basis. Those of you who are not members, how could you have a copy of this? I'm going to tell you about that right now. Let me switch myself to smaller. There we go. Now, I'm going to come back in here, and what am I going to do? First of all, what did we cover? We covered the importance of budgeting, how to simplify it, how to react, instead of being a reactive management team, a proactive management team, why prime cost is critical to your success, but your budget is critical to you being a proactive management team. This is it, man. It's your plan for success, and why we measure every single month. You want a copy of this? You're not a member? I'm going to give it to you. Well, there's a catch. You're going to have to talk to us, and I'm going to tell you about it. But you stick with me to the end of this webinar. If you've got any questions, you should have typed it in the comment box. If you're having trouble and you can't type a question in the YouTube live question or the comment section, or the chat, I should say, make sure you log into your YouTube account. Then you're going to be able to do that. Otherwise, Jenny Brooks and Greg Sauerbach have been gathering your questions. I'm going to answer them at the end of this webinar, as well as tell you how you can get an installation of Budget Creator Pro for free. Now, let me tell you a little bit about what we do at the restaurantexpert.com, and then I'm going to answer your questions. First of all, we're a restaurant training and coaching company. That's what we do. We help independent restaurants not only survive, but thrive in the sea of chain restaurants out there. Use the same systems and tools they do without losing our independence. We love our guests, we love our employees, but we are going to do what they do, and that's make money. Now, how do we do that? Well, as a restaurant training and coaching company, we use software called Smart Systems Pro to handle every aspect of your business. Daily managed log, cash controls, online scheduling system with labor controls, complete food, beverage, merchandise systems, recipe cards, ordering, inventory prep, key item reports, waste sheets, weekly budget variance. Power of profitability at your fingertips, whether you have any device, Droid, an Apple device, a computer, I don't care what it is, web browser, you have access to your numbers. You can see that Chef ordered on time, on budget, following PARs. They scheduled next week on budget. They're controlling labor, all at your fingertips. Now, the software is merely a tool. What comes along with it? Well, there's unlimited training support. Monday through Friday, 9 a.m. to 7 p.m. Eastern Standard Time. Call all you'd like. And there's a chat window for those who are millennials who don't like to do that. Free software training, from weekly webinars to 10 times a year, 2-day trainings here in Phoenix, Arizona, free of charge. Send as many people as you want. We understand your investment is to get here, but you've got to know how to use the software. It doesn't help. You get direct access to me or one of my coaches. That's help me put together my budget for me, with me. Re-engineer my menu and find me 3 to 7 points. Help me deal with, I've got a harassment problem or a claim. What do I do? How do I walk me through? Teach a manager cost of goods sold. Hey, man, this is a coaching part. And you've heard every coach in the world talk about it. Well, Tiger Woods has a coach. Michael Jordan had a coach, blah, blah, blah. Yeah, why? Because they make us do things we don't want to do. They keep us on path. We're a restaurant training and coaching company. The software and other systems, they're tools. We're going to help you be successful, hold you accountable. You get 12 times a year, an hour of my time. And oh, by the way, we're not attorneys, we're not accountants, we don't punch a clock. You got an extra freaking question? Pick up the damn phone. If you become a pain in my ass, I'll let you know. But otherwise, we understand you may need extra help. We're here to help. You get restaurant training products. I've got $8,000 in training products we've created over the past decade plus. You get them all digitally downloadable, included in your membership in Smart Systems Pro. You get, on top of that, workshops and seminars. We do 4 one-day seminars here at our office, free of charge for you and a guest. You get to attend 2 of those, you and a guest every year. But I got news for you. I got empty seats. Hey, David, can I send an extra person? Can I come a 3rd time? I got empty seats. They're yours. We're going to go in and out of the system, teach you what we teach, in and out of the software, but also it's not just software training. It's really about you and how we connect all the numbers. I do a 3-day workshop twice a year here in Phoenix, Arizona called How to Run a Profitable Restaurant from Soup to Nuts. You can attend it, you and a guest, for $375 a year, or not a year, per workshop, because I only have 100 seats. That's the only thing you'll pay me extra for. You get everything that we do in our system. If we update it, we add. We've just finished QuickBooks integration. We're finishing up POS integration. We're about to do catering software integration. These are all included. I lied. There's one other thing you pay me for. We've got a labor app for your employees. They're going to have to pay me $4.99. Oh, no. Okay? But everything is yours. Who does that? Well, there is no sign-up fee. There is no setup fee. It is month to month, which means you could break up with me like we're dating in high school, say, David, it's me, it's not you, and you can cancel. Give me 30 days notice. That's all it requires. But the bottom line is, if you're ready to make change, we're here to help. We understand as a restaurant training and coaching company, we want to extend to you a bonus. And that is this. If you sign up with us, you call Greg, you set up an appointment, you go through a 15-minute conversation, then line up a demo, and you say, this is what I want to do, fantastic. I will promise you a bonus, something we cannot offer forever or everyone. And that is, if you mention you were on this webinar, and I don't care if you watched it live later, you say, Greg, I was on that YouTube live webinar on budgets, and you want to sign up. I'm going to give you 6 months, free of charge, personalized attention by one of our coaches on a weekly basis. One of my team members will meet with you and your management team on a weekly basis, and we'll spoon feed you. We'll say, hey man, don't worry about recipe costing cards. Let's do daily paperwork. Over the next 4 weeks, this is what we want done. And we want you on that call. We're going to teach it. We're going to train it. We're going to coach it. We're going to hold you accountable. But ultimately, your managers don't work for me. If they don't do what we ask, you need to hold them accountable. But if you follow this plan, we'll have you completely implemented within 6-month period of time. It's up to you. But I'm going to make that commitment if you want to make a change. Last but not least, I'm going to answer your questions in just 1 second. What does it cost? It's not a cost. If I'm a cost to you, you ain't using the systems. Because I should be making you at least 10 times a return on your investment. Minimum $3,500 a month or more in savings if you're using the systems. We're $347 a month. No sign-up fee, no setup fee, month to month. Now, I told you at the end of this, if you want to learn about what we do, and you give Greg Sauerback, my solutions coach, 15 minutes of your time, whether that was set up with an online link, whether you call him directly, or you get a phone call from Linda Getchell, Peters Getchell, my mom, and you set up a 15-minute call where we can learn more about you, we can tell you what we do and see if there's a fit. If at the end of the call you say, Greg, we're not a fit, we don't call you again. You'll be in my email list till you die unless you opt out, but we won't call you because I realize if I have to talk you into this, you ain't going to do the work. So it's either right for you or it's not. And you say, okay, I want to learn more. We set up a demo, an hour-and-a-half demo. You and anybody you want on the team has internet access and a phone. You can literally, we're going to share the screen, go through the software about an hour and a half. At the end of that, you can say, Greg, it's not for me. We're done talking to you. Greg, I got more questions. We'll set up another call, or hell, sign me up. Whether you go through any of those steps and only go through the 15-minute call, I'm going to give you an installation of our Budget Creator Pro software, which right now has only been available to our members. Members who pay us $347 a month. I'm going to give it to you for free. So if you're interested, you want the tool I just demonstrated, I will give it to you, whether we're a right fit for you or not. Because the last thing I want to do is want to be like, hey, wasn't this great? You can't have it. That's not the kind of guy I am. So let me look at your questions. You got any of the questions? Type them in the question box, or the comment box, if you will, chat window. And I'll take a look here. We'll answer them. So let me see the first question here. I've got Lamont asked a question. Curious about planning for a busy day with schedule, but not having the business you plan for. Does one continue to plan even when budget and sales conflict? You got to adjust. So bottom line is this. Our sales are unpredictable anymore. And that was another side effect of 9/11. Before 9/11, you could count on Thursday with $7,000. Man, you could set your watch to it. So now I'm going to tell you is you stick to your plan for 3 weeks. If I run really busy, don't, like all of a sudden I'm busy on Thursdays, don't add an employee. 3 weeks running your ass off, add an employee. If I'm high and I'm trying to adjust, don't knee-jerk react and lower the number of employees because next week I could be busy. If 3 weeks go by and my sales trend is lower, then remove people. 3 weeks is a trend, okay? So don't react 1 week to the next. 3 weeks in a row, make the change. Eric Mamo says, we have different conditions with our employees in Brazil. There is a minimum wage, even if they don't work, they get paid. We can't go under a minimum hours. Although we put on the budget, I don't think 55% prime cost is possible. Let me be very clear. I understand that in other countries, labor is a major problem. But the only way 55% prime cost is not possible is you are unwilling or unable to change your menu. You understand that? Prime cost. If I've got to run a higher labor cost, then I've got to find a way to run my food cost lower. I may also have to find a way. I've got a member in Chicago, Illinois, because here in the United States, unemployment is 4%. It's dropping. We're having trouble finding employees all over the place. He literally took his full service restaurant and changed it to quick service so it used less employees. Is there something? Could you redo your menu to simplify and only need 3 stations instead of 4 in the kitchen? Can I do it instead of needing, X number of employees? Could I reduce it and still give the great quality product, great service, but I've lowered my labor that way? So you've got to tell me, don't tell me why it can't be done, okay? Eric, don't tell me why it can't be done. How can it be done? It may be too expensive, may not make much sense, and we may decide not to do it. But don't tell me 55 is not possible until we've explored what could be possible. And then if it goes against our core values, it cuts product quality or service levels, things like that, we decide not to, then we decide we're going to run a 60% prime cost, and I'm okay with that because you decided. But don't decide before you tried. Sorry, I tub thump. Got a general question here. How will a budget help me as the owner get paid? Hell, good morning. It's your plan for success. You actually plan to get paid, right? The difference is, as a reactive management team, what's left over or not. You run lines of credit because you're bleeding. Because what do? We fix any and every problem easily in the restaurant business. How? Get out your checkbook, dude, right? Oh, I need more food. Better order more, but nobody looks to see if it's stolen, wasted, spoiled. We've got Jose working overtime. We've got, I want to bring in extra servers because it'll give great service. Wrong. It's a misconception in our business. When we have more people on the floor and we're slower, they talk to each other. They play grab ass. When I am barely in the weeds, my pinky toe is in the weeds. I'm just so busy, not in the weeds, but so busy, all I can do is focus on the guest. I can't focus on each other. We give the best service possible. Are we doing that? And by creating those scenarios, we plan to make money. That's critical. Last but not least, if you got a question, make sure you type it in the box right now. I've got one more question. And that is, a budget is scary because it can show you a lot of red or negative dollars. How do I get over my fear of seeing all that red? How do you not get over the fear of seeing red? By looking at it, by creating a plan. You understand? Most of us, we ignore it and we go, I don't understand. And we feel like an elephant is sitting on our chest. Instead, we create a plan. And what I would tell you is this. Instead of a 12-month or 13-period accounting cycle, when we do a budget, I would tell you to create a 52-period, a weekly budget. That way, I know when the sales are coming in by week, when payments go out, and if I see that I can't make a payment, I can move it to another month. I can create a plan literally by week. And that's how you get yourself out of a hole. I'm going to tell you, it's only happened about 3 times in 14 years. There may be somebody on this webinar, I may look at your numbers and ultimately look you in the eye and go, you got to close. It happens. Don't be a statistic. Don't wait until it's too late to create your budget, your plan for success. You need to create budgets right now. Let me see if there's any other questions. There are not. Man, I want to thank you all for hanging in there. I know this is a long webinar. This is really exciting stuff. It can change your life. It can make you money. This is your plan for success. If we can help, I want to be there for you. My team wants to be there for you. Simply call Greg Sauerbach at 1-877-457-6278 at extension 106, or you can go online, learn more about us, schedule a demo, whatever it may be, at therestaurantexpert.com. Thank you, everybody. I look forward to talking with you, working with you, and at the very least, I want you to take me up on my offer for the free installation of Budget Creator Pro. Thanks, everybody.